All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got some crypto news stuff for you today, and unfortunately, you're looking at the appropriate picture today. We got that Bart Simpson, and we dumped down to the 3700s, and probably even less by now by me reading this, which we will check out CoinMarketCap at the end of this. Now, I've been saying for quite a while that typically the price of crypto, lately anyway, has gotten up to 4100, 4200, and then crashes right back down to 37, 3600, sometimes even less, to 3500. And that's just the way it's been going for quite a while. And that anytime you see these gigantic bull movements where it's just one long green candle, it means basically that it was one purchase. Now, of course, depending on how long you have set your candles on your trading view or your exchange, but this is typically just one gigantic purchase. So that's not necessarily a bullish movement. And I made a video yesterday talking about the bullish movement, and let's just say that didn't last too long. Not at all. But there is a lot of bullish sentiment turning. And a lot of institutional investment coming, a lot of money sitting on the sidelines waiting to purchase crypto. And what we've seen the past few days, few weeks or so, are just whale purchases. And I've been saying that over and over and over. So when you see these whale purchases and it gets over 4,000, in my opinion, sell. Now, I don't like to give out advice like that, because if you sell and it goes up, then you're like, hey, you told me to sell. And I'd be like, well, I guess I kind of did. But it's been going on like this for about a year now, going up to 4,200 and then just dumping right back down to the 3,000s. These are just whales that are manipulating all of us, manipulating the entire market. And it's super easy to do if you have a lot of money. There's numerous ways that you can do this. We'll talk about how exchanges do it, but for the most part, the individual whale can just buy over the counter and sell, dump the coin. They can buy on an exchange and then dump it. They can buy on an exchange, raise it with millions of dollars, and then raise the price. That sort of raises it all across the board for most crypto, and even on other exchanges, because the arbitrage will just sort of even it out and everything will go up equally over time. And then what happens is a lot of other people buy in. They FOMO in. They start saying, oh, look at the price of coin is going up. I better start buying in now, instead of when it was actually at the bottom when you should have bought. Then you actually raise the coin even more, and eventually you start to see, again, the Bart Simpson that goes across, and then they end up using some kind of leverage, margin trading to short it, because it's inevitably going down, and then they start selling, and then it goes down, and then they fulfill their margin orders as well. It's a little easier said than done, but when you have a lot of money, you can get the job done. You just buy a bunch, it causes other people to buy in, and then you can just sell it for a much higher value. Or you just sell a little bit of it, and that causes people to see a dip, and they say, okay, well, I'm going to buy this dip, and they start bringing it up even more, and then you sell the rest of it. This is just, it's not rocket science. It's pretty easy, and without a regulated market, this is what we've been seeing in crypto for a very long time. And that's not just whales. Sometimes it's bad news, sometimes it's hacks, sometimes it's this, that, or the other thing throughout history. But lately, it's definitely been the whales. So I want to read this article for you guys, and it's not really an article, it's a Reddit post. Somebody says, every time I buy, there's a 10% drop in the market, like instantly. I bought this morning and check out an hour later, I'm already down. So basically, you bought at the wrong time. You bought after you've seen all of these whale purchases, which again, we'll look at on CoinMarketCap in a little bit more detail in just a moment. So you bought at the wrong time. You FOMO'd in, and you did exactly what the whales wanted you to do. And I hate saying whales, because that's like saying they in a conspiratorial way, but it's true in this case, and it doesn't matter who they are, as long as they are a whale and made the purchase, which raised the price of crypto. Then you've seen that rise, and you bought in, which you raised it even further for them, and then they dumped it on you. So this happens all the time, and you're buying in at the wrong time. You're FOMOing in while it's going up, because you're like, well, it's going up, so now I better start buying in. I better FOMO in. I don't want to miss out on this pump. But instead of buying at the very bottom when you feel psychologically that you shouldn't buy, but that's the time that you should buy. So somebody answered this in absolutely in the perfect way. So Crypto Crack Lord, thank you for this response. So there's actually a reason for this psychologically, and it's essentially how all markets function. Stock markets, housing markets, etc., all have this similar underlying psychology working on it. So when the price goes down, it's safe to say everyone's losing confidence and it goes in waves. People lose confidence at certain points, so they sell at certain points. Then the same is true vice versa. So what happens is actually that a large amount of people start getting convinced to buy when a group confidence has grown. You're just part of that group and you're sitting in a certain part of this group. Your confidence might grow to enough to justify buying in when the price goes past 4,000, or maybe it'll be 4,200. The point is, this type of psychology is what runs markets in the background. The irony of this is that the time when most people gain enough confidence and FOMO is actually when it's the worst time to buy, because it's usually right when the current cycle's euphoria is peaking. And goes to show with the all-time high of Bitcoin. People started buying in at 14, 15, 16,000, and I can see that. I think being a YouTuber, you can actually you actually get a better picture of crypto than I think a lot of people do. I get that picture as my YouTube analytics, my views, the people questioning, asking me questions, the people commenting, the people emailing me for very specific questions, just everything in between, the views, the watch time, the people watching tutorials, the people watching this, that, or the other thing. You could really see it, and that exploded, of course, during, and it makes sense. It's not like I'm saying any kind of secret to you that once it's 14, 15, 16,000, the hype all around the world is exploding. And I get a first-hand look at that statistically, and you can see more and more people buying in at 15, 16, 17,000, more and more people watching YouTubers, and then once the price goes down, nobody cares, nobody watches YouTubers, people unsubscribe en masse, nobody watches the news, nobody cares about the tutorials, nobody cares about mining, and that's the time that you should care about it. That's the absolute highest time that you should care about it. When Bitcoin goes down to 3,400, instead of buying at 16,000, now you can actually take that same amount of money and buy triple, quadruple the amount of crypto that you could have bought at 16,000, and 5 times, 6 times as much as you could have bought at 18, 19, and 20,000. So it's just people buy in at the wrong time, and they listen to the psychology of their mind in that, like, when they see the green, oh, I gotta buy in. But that's the worst time to buy in. And it's like when you see on Reddits or forums or posts or wherever where a coin is pumping 100% and it's up by 50, 60, 70% because it's pumping. And they're like, you guys got to get on this coin right now at 70%. Well, if you buy that coin, it's not going to pump much further, and it's just going to go back to where it was at a negative 70% the next day. And you're stuck all the way at the top, and you just have to essentially eat that loss. So it's exactly that. And it's just people just don't know when to buy in, and it's just unfortunate. Be it at the top of the bull market or just a correction, as it hits these prices, the people who bought in much lower are seeing the euphoria peak and the price struggle to go any higher as the final few push people in and they decide it's time to sell for this cycle, and the price crashes. Now you've parted with your money to some other people who bought in at a lower point in the cycle when you should be buying in. Point of this is that you should be very careful when you feel very strong feelings of FOMO. You should try to make sure that you're not being caught in the hype at the top of the cycle. It's often not the best time to be getting in. So anyone who's seen these cycles enough will have recognized that in the past few days, the risk of buying has been increasing as the price has increased without enough of a pullback first. So, overall, these are not organic growths. Now, when I talked about the video yesterday that, it passed at 4,000 and it's getting bullish, there is a bullish sentiment going around. And, more and more posts are being bullish, more institutions talking about it, more, investment celebrities, if you will, are getting into it and talking about it. And that's good for crypto. That's good for Bitcoin. That's kind of the start of a bull run. But what I like to say on my channel all the time is that when you see these one green candle like that, very long, it's time to sell. It's not time to buy in. That's not organic growth. That's one person or maybe a few people, who knows, it's hard to even say necessarily, in that 15-minute candle period, when it goes up, Bitcoin goes up 10% in a 15-minute period, that's one person buying. That doesn't necessarily mean that everybody's buying in. It's going to organically continue to grow. So very unfortunate how this is all, playing out. So another article here, and this is a little fuddish, but it is a good question. If the price never reaches the moon, will you stick around? So years ago, most people in crypto expected Bitcoin to win out, with other projects supplementing or being absorbed. After the blocks filled up, the space diversified, fans of the various projects began to push for their own to win out. Started to believe that theirs could be the cryptocurrency to rule them all. Naturally, nearly all won't be, and as the space becomes increasingly packed with newer and sexier projects, the odds of a coin remaining to be in the top 5, 10, 20 are becoming increasingly slim. But how does that matter? If your favorite coin goes down lower and lower on the market cap, does that mean that it's all over? Now, I may sound like an old-timer, but back in the day, few people expected to get rich off of crypto. Your average crypto fan was in primarily for its ability to give financial sovereignty, secondary for its ability to save people money and build innovative business. The idea of buying some and getting rich when the valuation skyrocketed and buying in under precisely this expectation was quite rare. Success meant replacing old systems, not increasing your position in them. So understandably, when enough people start to believe in the above-mentioned ability to disrupt old systems and change the world, money starts to flow in from the late 2013 bubble to all of 2017. Suddenly, you had true believers in the tech, many of whom had financial sacrifices for a cause they believed in, now swimming in money. Over time, this caused many people to get lazy with their expectations, and now ridiculous valuation spikes are considered the norm. Coincidentally, much of the activist fervor has died down, as well as we want money while fewer people want to put in long volunteer hours, and especially what I'm seeing with developers not actually making their coins user friendly or the user experience or the UI friendly. I still have yet to see a coin that is actually truly user friendly and passes the grandma test, and when that happens, that will be the coin of the future, not necessarily Bitcoin. Of course, Bitcoin will always be around, but there is something about developers that they refuse to make user-friendly crypto. And how you do that, I don't know, but somebody will sooner or later. So that's a lesson to all you developers out there, but probably aren't watching this. We love metrics, facts, and figures. It's a great way to concrete feeling over something that's made up of an endless array of contributing factors. When units of a technology are able to be traded on exchanges, it's easy to see the price going up as a sign of success, and when the price going down is a sign of failure. In reality, while this is an element to success or failure, price doesn't reflect technological fundamentals, real use, or value transferred. Consider for a moment the original goals of crypto to provide an open access, censorship-resistant means of value transfer. And these goals can be, in theory, achieved without the price changing significantly. Even to serve as sound money, it only has to increase in value against fiat currencies over time. Similarly, an astronomically inflated price can occur without any of these goals being achieved. So all that being said, how long can you hold on before you bail? How far down can the charts go before your favorite coin and you start to worry? And how many other projects can get a higher combination or combined valuation? And how many more speculators can declare it dead and buried based on the price alone? So it's interesting. Is everybody in it for the price, or are people genuinely trying to mine and buy crypto so that they can actually send it around to everybody? And that's originally how Bitcoin started. It wasn't really meant to have a huge transaction, or was that just an oversight from Satoshi? Maybe the transaction is just fine for an underground group of individuals who use it. But now once the whole world starts to use it, the transactions are far too low. And the difficulty was that an oversight by Satoshi, that I was reading articles at the height of crypto that whole power plants were being powered back on. Coal power plants in Australia, coal, one of the most polluting substances in the world, at least in terms of air pollution, being turned on to power mining farms. Did he think beforehand that, hey, maybe one day the difficulty will be so high that it will require an entire power plant to run this? All good questions to ask, in a bear market like this. Okay, so I had to cut the video off for just a second, and we're going to continue. So the next article I wanted to show you guys is how exchanges are manipulating the cryptocurrency market. And so the current seems to be largely driven not by organic buying and selling, but by exchange-driven manipulation of the spot market to exploit the current dynamics of leverage trading. So we just saw it again now as exchanges liquidated 3K long positions, but you can see this pattern of clear manipulation over and over in the last few weeks. So you can see that this was a little while ago. The price is 7,000, so this article was written quite a little while ago now, but it does get the point across, and it makes it quite clear. As you can see, there's all kinds of manipulated ups and downs, and is it all just whales doing that? Do whales even really care to do this? That's a good question. Now, I'm sure some do, but it would seem likely that exchanges actually do it quite a bit as well. So what's in it for the exchanges? So we've seen several forces set an incentive for exchanges to do this. And now it's even more incentivized for them to do this because, again, once again, this article was written a little while back when it was $7,000, which we would all dream of now. And now that the volume is increasing, it should be a little bit better for exchanges. But there was a time there during the bear market where volume was exceptionally low, prices were very low, and the exchanges likely were probably making much, much less on all of their trading fees. So one is consistently declining volume. This leads to lower total fee revenue for exchanges and an incentive to manipulate the price in order to earn revenue through liquidations rather than trading fees. So exponential increase in leveraged positions. Both leveraged shorts and leveraged longs are at a near record level. Shorts especially have gone from 8K outstanding in January to 33K right now, a whole tripling in outstanding positions. So you can see total shorts and total longs are quite high, and again, this was written a little while ago, but they still are. Increasing popularity of derivatives and fading of the spot market. Anybody who has been checking the combined order book over the last few months has seen BitMEX completely take over the market, while GDAX, Bitfinex, Gemini, and others see consistent declines. And it's not necessarily that there's a lot of volume on BitMEX, but it's this leveraged volume which makes these 100x trades these incredible amounts of volume. So of course BitMEX looks way, way bigger than anything else. Without that leverage, they would probably likely be, somewhere down, in the middle or even at the bottom. So there's an apparent increased interest across the internet on how derivatives work, and anecdotally, more people are moving away from the hodl meme and towards trading, taking high margin bets with a portion of their stack. And I actually seen a post just a little while ago, a few days ago, about somebody who lost basically $36,000 on one trade because they were trying to follow somebody's TA who was saying the price was going to go down, and this was just before it went from 3,600 all the way up to 4,100 in recent. So, and then it just came out later on that they had posted about their loss. So they were basically following TA. Somebody was like, hey, it's going to go down. So they're like, okay, well, I'm going to make a massive leverage short on this and gain a whole bunch more Bitcoin. Turns out some whale purchases came along and drove that price up. And we're going to get into that in just a second. So some exchanges like Gemini have reacted to all this by increasing their trading fees by 400%. Meanwhile, Bitfinex specifically seems to be using its hefty weight to manipulate the price in order to capitalize on the record number of people using margin to bet. So margin trading is essentially borrowing money from lenders so that one can increase their buying power and invest in a larger amount of coins, or what they'll call leverage, which is a great way to lose your coins. I don't recommend it. Both longs and shorts are bets on the price moving up or down, and they have a liquidation price at which they get liquidated by the exchange. Essentially, the exchange gets the entire stack they bet and extracts a high market fee multiplied by the leverage. Since the exchanges know the characteristics of the outstanding short and long positions, and since volume is low after these pumps or dumps, leading to sideways drift, they can essentially engineer movements in price that create income in terms of liquidations. So when there are lots of over-leveraged shorts, an exchange can pump the price with bots briefly and collect the short positions. It's similar to longs, but in reverse, a quick burst of selling pressure. So evidence of manipulation. You can see this in most recent pumps too on Bitfinex, where 1K buy orders appear out of nowhere after long sideways movement, only to be followed by either sideways movement or slow bleed on pathetic volume. So let's just go to CoinMarketCap real quick and look at those real quick. So we can just go back to probably the 1 month, why not? And we can see exactly that. We can see these gigantic movements, and then eventually something happens and another gigantic movement occurs. And it's not just an organic increase up to here. It's this instantaneous jump, and this one isn't so much, but this one is, with an instantaneous fall. And you can just see these over and over, and like these just aren't organic. These are clearly like a lot of money being pumped in and a lot of money being pumped out right after each other. So this is why I always say that as soon as you see one of these, it's followed by a Bart Simpson and followed by a dump immediately. But what do those mean? So take a look at the most recent pump up to $7,000 BTC. Again, the article's a little old. Instantaneously liquidated about 700 short positions. So now, this last dump was laddered 12.K sell order on Bitfinex that liquidated around 3K long contracts. So Bitfinex tends to be where the big money traders move. Therefore, even if the long position was only 0.5 BTC on average, they would stand to make a ton of money. If you look at the BitMEX Rect Twitter feed that shows a running list of BitMEX liquidations and with humorous commentary, you'll see many positions above $1 million being liquidated during these moves. And this is what all the BART formations we have seen stem from, which we constantly see today. Once again, BART formation there. There was kind of one here, but it just disappeared. BART right there. Just everywhere. Every time you look. So it's not George Soros pumping Bitcoin for fun and giggles, nor is it the nebulous whales. They have no incentive to try and pull off pump and dumps, now that it only leads to either sideways movement or decline after the pump, although I disagree with that slightly. A pump and dump only works if the delta between the top of the pump endpoint and dump initiation point is positive, while at the moment it seems to be followed by sideways movement. So even a whale could pump and then create a short position because it's just generally what's going to happen afterwards. But again, it is starting to look like exchanges are kind of doing this. Those who do want to bet on further upward movement seem to be doing it off of the spot market, using margin with futures and perpetuity swaps on BitMEX. This makes low volume spot market ripe for manipulation. Exchanges like Bitfinex and BitMEX have every incentive right now to manipulate the price. So another thing that I wanted to look at is like all you can really do if you're a trader is look at the current ratio of longs versus shorts on Bitfinex and be aware that once short contracts become too high, again, you can see that right here. So you can see the long versus short, and when the longs become too high, and we'll go down here and read this again. So just take a look at this article if you can. Longs versus short on Bitfinex, and be aware that once short contracts become too high, it's possible that an exchange may pump the price to profit from it, because if they pump the price, then all those short contracts get liquidated and the exchange makes a lot. Alternatively, if the longs become too dominant, we may see a dump to liquidate the long shorts. So again, in this picture right here, this example, the longs are getting really, really high. So there's going to be a dump soon because people are starting to long and get a little too bullish on Bitcoin. And this is really suppressing prices and really manipulating prices, because these are all people that are essentially bullish on Bitcoin, and it beats out the majority of these. It's the majority of bullish people who think that it's going to go down, and these people will win. So you really want to get on the side of the people of the lesser side. And if it was reversed and the short positions were really high and the long positions, the exchange is likely to pump the price to eliminate all those and liquidate all those short positions. So you should be on the long side, in a nutshell. So moving on, I just wanted to show you guys this video. It's 2 hours long, so we're not going to be actually watching it, but I would like for you guys to watch this. If you guys are bored or you want to have any opportunity to watch something interesting, this documentary was absolutely fantastic. I watched it much earlier in the day when I couldn't actually make a video because my son was awake and I had to just wait. So it's called Bitcoin Documentary, The Unbelievable Story of Mark Karpelès. So just put that into YouTube and check this out. It's only got like 1,700 views. I don't know if this is just a ripoff, like if somebody just like put this on a different channel and maybe has higher views elsewhere. But it's really, really awesome. And it was all the way back in December 16th uploaded, and not that many people watched it. And it really goes into detail about the entirety of the Mt. Gox incident and a lot of interviews with Mark Karpelès and so on. I wish I could show you that, but apparently it doesn't want to play at the moment. And everybody talking about it for quite a long time here, and about all that went down and the trading bots that were on Mt. Gox and what exactly had happened. And it just gives a lot of insight into into Mark Karpellis and what happened with Mt. Gox. And he's a really weird guy. Definitely has like Asperger's or something, which I'm not like ripping on him, but he's definitely a very intelligent person. But he basically took on Mt. Gox, and as soon as he bought Mt. Gox, what had happened was is that there was 80,000 Bitcoin gone when he went like weeks after he bought it. So that he ran into trouble there because at the same time Bitcoin was rising in price. So he had to pay 80,000 Bitcoin back to people. He basically had to get that back onto the exchange in case everybody started withdrawing. So like that you have 80,000 Bitcoin missing. So he ended up making this bot that would every day, like every so often, would just be buying 15 to 20 Bitcoin at a time. And what he was trying to do is liquidate that Bitcoin so that he could get that 80,000 Bitcoin in terms of in fiat money, because that would be easier to control than the wildly fluctuating 80,000 Bitcoin. And it just really took a toll on the company. And then, in a nutshell, somebody along the line had gotten a hold of an Mt. Gox auditor's information, login information, and they managed to get a hold of one of the private keys for the hot wallet. So the hot wallet was always sending Bitcoin to the cold wallets, and that wasn't the problem. The problem was that the hot wallet had a little leak in the bottom of it, and they do a good diagram of it. So imagine just a bottle or a jug, and there's Bitcoin going into it, and then the Bitcoin is going into another jug of cold wallets. So that wasn't the problem. What the problem was is that somebody got a hold of a private key, and so one of those hot wallets had a leak. So, and somebody in the documentary makes a really good point, really good analogy, if you will, that if you had a small hand-sized hole in the side of a bank's vault, and you could always just every day you could reach in and you could grab only what you could reach, so only what was put at the back of the vault, and you could just grab a little bit every day until eventually the vault started to run out of money, because every day it was just stealing money from it, and all you had was this little hand. So somebody just had one of the private keys for the hot wallet, and a little bit of Bitcoin was going missing every day. And eventually, it added up to 850,000 Bitcoin. So Mark Karpellis had a problem and never told anybody that they were negative 80,000 Bitcoin basically as soon as he bought the exchange, and he was desperately trying to make up for that the whole time and never told anybody. So there was a lot of problems with Mt. Gox. It's an extremely interesting documentary. I hope you guys watch it. It's very very good. So moving on to CoinMarketCap, we are down to 129 billion market cap. We're actually starting to turn around just a little bit. You can see the little fish hook on everything. People are starting to buy that dip. We got down to 127 billion market cap, down from 140 plus. So we suffered a pretty terrible blow overnight. But Bitcoin dominance at 52%, and we're starting to turn it around just a little bit, as you can see, because now everybody's buying into Tether to save that. But anyway, 3,845 Bitcoin. So we essentially just got dunked on overnight. And it could have been short positions being liquidated. Who knows at this point? Could have been whales selling off. But you could see the Bart Simpson here. And I always say that as soon as it gets to 4,200, for almost an entire year now, it dumps. And whenever you see these these immediate increases, it's bound to go down from there. But that's all I have for you guys today. I hope you guys enjoyed it. Make sure you guys subscribe to the channel and like the video. Helps me out a lot. My social media in the description below. My Twitter, my Twitch, my Steam. Follow me on those if you get the chance. But again, that's all I got for you today. Hopefully the markets turn around once again, but make sure you guys are a little bit more wary of the 4,200 mark right now. That seems to be the trouble point. But that's all I have for you guys. Hope you guys enjoyed it, and as usual, I will see you guys next time.